radio for a really great future. We're talking real money.
Well, he found me a used car today. He also said I did a pretty good job on the first hour of the show. And now, through the magic of the interweb, he joins us on the program.
Was that a dream?
That was
I dreamed you were doing a show
by myself, crying in the corner.
Yeah, oh golly,
You feel better? Would you call it a dream or a nightmare? Which is it? Come on.
Well, it was so real. It was vivid.
I'm sorry for you. I am.
Oh man, that was a nice nap though. I also dreamed. I was dreaming that
yes?
I was dreaming that people can call us at there's a number like 855-935 talk. I mean a number that says words in it.
Yeah.
Yeah. Oh, I dreamt that. I dreamt that, and I don't know if it was a predictive dream or but I dreamt that I don't know. You read an article somewhere
finally
about things to do in volatile markets, like they aren't always volatile or something. I don't know what I'm talking about. I'm sorry. I'm delirious.
You're feeling better. Don McDonald, ladies and gentlemen. By the magic of whatever this all is, I don't know if it's tin cans or wires or whatever, but it's working now.
Working now.
I'm glad to have you here.
That's a good thing. Yeah, it's working.
Yeah, no, I did. I read a fascinating piece. Fascinating. I mean,
You mean that was real too?
That was real. Your dream has turned into a nightmare.
I'm telling you, I'm like in one of those crazy movies where you don't know if it's real or.
Well, I was telling people I had one of those where I could see you, but I couldn't hear you. It was like one of those dreams where you're like trying to reach somebody, but you can't quite get to them.
Yeah, and then you what you do is you kind of fall out of bed trying to reach somebody. It gets so real. It's like I do those.
Dude,
too.
At my age, if I fall out of bed, I'm not getting up again. That's it. So anyway,
which my wife worries about. She goes, "You act out your dreams. You're gonna have Parkinson's." I go, Debbie, quit reading that stuff.
Yeah,
just quit reading that stuff.
Find something else. She should be reading this stuff because here are the 4 key things investors should do during volatile times.
What?
4 key things.
Wait a minute.
Number one.
Wait, hold on. Before you say number one.
Yeah.
Then don't these generally mean things that you should do during all times?
Yeah, because
aren't all times volatile?
Yeah, but we're heading into massive volatility.
Oh, are we?
Yes.
Oh, good to know.
So shutter the
Thanks for sharing.
Yes, exactly. Lock yourself in the basement. Number one, has your time horizon changed? Well, for me, it's
every year it gets shorter and shorter.
Yeah, I think they're.
But I'm pretty sure that happens to everybody.
I don't know what even Bill Gates doesn't miss out on this one. I saw a picture of him recently. I thought, wow, he's getting older.
Yeah.
Sorry, Bill.
Yeah, look at me. Woo, doggy.
Number 2, has your risk tolerance changed? I hate that.
Why?
Because your risk, you feel great about investing in stocks when prices are up. You feel lousy when they're down. And frankly, it should be the other way around because there's more risk after things have gone up.
Yeah, but what I think what they're talking about is the psychological component of risk tolerance. And that, I think, remains relatively stable through life. As a matter of fact, I actually believe that with some people, your tolerance for risk increases as you get older because you begin to learn that markets are volatile.
Yeah, it's not going to matter a whole lot.
It's not gonna matter,
number 3, do you have sufficient reserves? See, first I misread this because I was having toast. I thought it said, do you have sufficient preserves? But I was wrong.
I just ordered some new ones yesterday because we were getting low on preserves. So I did. I ordered some new ones. And does that mean, do you have enough emergency money?
Is that
something
like that? Yeah, like a balance in your portfolio.
Right.
And I mentioned last hour, you can buy a 1-year CD and make 5%. Holy cow. But here's the one.
Where were you like 3 months ago? And I was saying the same thing.
Should have been listening. Apparently,
you weren't listening.
It was that same dream where I could see you, but I couldn't hear you.
Right.
I was clawing at the screen like I know he's there somewhere.
And finally, ladies and gentlemen, number 4.
I hate this with a white hot passion. Just really do.
What is it?
Well, because here's what they say. Our interest rate environment has changed, and that has sent shockwaves through the banking system, stock market, et cetera, et cetera. Well, first of all, there's always some reason that there's shockwaves. But what do they suggest then? Have you considered the available alternatives?
What?
Well, the
know
traditional. What are alternative investments in volatile times?
Really? Is that what they're talking about?
Yeah.
Alternative investments?
Yeah, right.
I mean, I was going to say the options are you can be in the stock market or you can be in fixed income.
No. There's all kinds of great things you could be in.
No. All the rest is not investing.
Exactly. It's garbage.
All the rest is trendy stuff or pure, unadulterated gambling in the guise of an investment. They're not investments. Investing is too easy to be this hard. 855-935-TALK.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
You wonder sometimes how certain couples stay together, and then you realize it's because they're just so dramatically different from each other. Because if they were the same, they'd probably kill each other. I am narcoleptic. He is hyperactive. It's just like he's in there doing, and I'm going. I'm just going to go take another nap.
It works.
Yeah. For somebody.
Yeah.
Hi, everybody. Don McDonald here, along with Tom Cock over there in the Northwest News Radio studios. The
spacious,
sparkling new.
Yeah.
Whereas Don is still in the cave in Florida.
Good place for you. But
not yet fully soundproofed, but I'm working on it. It's getting closer. We're here to talk with you about money, and we want you to initiate a decent-sized part of the conversation, and you do that by giving us a call at 855-935-8255. It needs a song. Like
I'm not big on the whole jingle thing, but okay.
that the Empire Carpet guys, I guarantee you can sing the number.
I don't know Empire Carpets.
Yeah. Anyway.
Jingles are a 70s thing. That's old, dude. It's over.
Jingles are a 60s thing.
Okay,
Jingles
60s,
are a
70s.
50s thing.
Okay.
And I think they should be coming back. So give us a call at 855-935-8255. Talking Real Money. Jonathan, you're up next. Welcome to Talking Real Money.
Okay, hold on, Dave.
Yeah.
All right.
Hello.
Yes, sir. I'm 63 years old.
Yes.
And I'll be 60 this year, and I want to retire at 64-ish. I got in my 401k about $900,000, and I got a Vanguard account that has about $7,000 in it. High yield savings account that's got $35,000 in it. And I got a Robinhood account that's got like $13,000 in it with 30 different stocks that I'm juggling.
Yeah.
So I'm trying to figure out how best to consolidate or what should I be doing to make that retirement date at 64.
Well, first of all, tell who's ever calling you, call me back. That's one.
Yeah, he can't do that because they're calling. Anyway, here's the deal. Because Tom was just that way. Anyway, he gets grumpy sometimes when he exercises. Well, really, the key is to know what you need to do yet is to know what you need to live on in retirement. What your Social Security is going to be, what all of your sources of income are going to be, and then how does your portfolio need to...
I told you, he's talking to somebody else. You're not.
Well, they're getting the car.
Enough, huh?
They're picking up the car.
Okay, fair enough. The car does trump our show, I guess. But yeah.
Did you actually buy it?
I apologize.
Did you actually buy a car, Tom?
I didn't. You did. I haven't looked at it. Don sent me one. I got to.
All right. Anyway, Jonathan, back to you. So let's talk about that for a minute. How much are you going to get from Social Security at age whenever you take? And if you can avoid it, don't take it at 64. Let's go backward. What's your annual cost of living?
I'm in here in Seattle. It's high as all get out.
No, but what's your monthly? How much every month do you spend to live?
I'm spending at least $6,000 a month.
$6,000 a month. Okay, so
yeah. Wife, 2 kids.
Wife, 2 kids. How old's your wife?
She's 50. She's 2 years younger than me. So she's 58 this year.
So, is she working or not?
Yes.
How much does she make?
She makes 95.
$95,000 a year?
Yeah.
I don't see what you're worried about. Stay married and keep her working. This is a pretty easy call. We're going to go to line 2.
No, she's talking about retirement.
No,
She's
no,
like, I want to.
no.
Oh, no.
Years younger. Sorry. Keep working.
Again, you guys, does she have any money saved, a 401k, all that kind of stuff?
It's at $200,000 about right now.
All right, so you guys have got over $1 million, right? $1 million, just $1 million in a properly created portfolio, one that is really well diversified, has stocks and bonds in it, is rebalanced regularly, is not fiddled around with, is just left. No more buying stocks at Robinhood. You give that up completely. The Robinhood account gets closed. It all moves to Vanguard. You start to build a portfolio. But a properly diversified portfolio with over $1 million in it, sir, can generate really pretty darned easily about $50,000 a year. Just your portfolio.
And it can sustain itself long enough for you and your significant other.
So you're doing great right now. Just keep saving. Stop Robinhooding. Stop playing. No more playing with money. Money is too important to play with. You want it well diversified in that 401k and in your Vanguard account. Those are the only two places where you'll have money. 401k, Vanguard account, period. That's all.
And I would say you're a great candidate to have a financial retirement income plan. You should have a plan that says, okay, I'm this old, I need this much income. My wife says she's going to quit, which I don't think you should let her do, but she says she wants to quit. My wife said that this morning, too. She headed out to work. But figure all those things out with a planner. Then you put the plan in place, and Don's right. You quit messing around with individual stocks or whatever. Properly balanced portfolio, get on with your life.
But my belief is you've reached the point where you can live comfortably in retirement. You're there because when you roll Social Security eventually into that mix, particularly if you stagger your work thing so that, somebody works for a while or you work part-time, you do some other things and delay Social Security for as long as possible, the two of you are going to be in great financial shape, I believe. Just keep doing what you're doing and do it better. Build a really diversified portfolio like we talk about on this show. You need stocks and bonds. Go take the risk quiz at Talking Real Money. Get this figured out. Okay, Jonathan?
Okay. So if I'm trying to get out of this Robinhood thing, you cannot roll that into like my Vanguard.
No,
right?
but yes, you can. Yes.
Well, yeah, you can move the securities over to Vanguard.
And
you
then,
can move all the stocks over and then slowly sell them at Vanguard.
And build a correctly diversified portfolio balanced between stocks and bonds. You could even, how much is that Robinhood? Did you tell us that?
It's 13,000.
13,000?
Yeah.
Dude, just sell it, be done with it, and buy one fund at Vanguard,
like VT
or something, and get on with it. I don't see why you're messing around there at all. That's a no-brainer to me.
So go get rid of the Robinhood. The cash is important. That's emergency money.
Yeah.
That should probably stay invested the way it is. But I would add that to the Vanguard. And at Vanguard is where I do my investing. Do your cash, your emergency needs, put that in high yield savings. That's fine. At Vanguard, that should all be investments. And since you're going to retire in a few years, go take the risk quiz. Figure out what the proper allocation for your risk tolerance is, and start looking at both of your portfolios, yours and your wife's, as one. They need to be blended together so that you have the right asset classes in the right places. And just keep listening, because this is something we talk about all the time, and we'll tell you how to build it. Thanks for the call. 855-935-TALK is our phone number. Call now.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
Yeah, we do this all the time. We do it here on the radio, then we turn it into a podcast, and then just keep things going. We do other podcasts, and you call us with stuff all the time. You call us live on the weekends at 855-935-TALK or on Saturday. And you also just call all the time. We have gotten so many calls and written questions and recorded questions at talkingrealmoney.com, and we really need to get through some of those. So here is a question that came in from the phones overnight, or I don't know, sometime.
Hi. Oh, I'm so nervous now. I'm Teresa from Virginia, and I am completely confused. I need you to explain to me what I just did. My husband, I failed last year to redo our W-4, and because of my husband's increased income at work, we ended up very close to the limits on IRA contributions. I'm just doing a spousal IRA. I put in $4,500 last year, approximately, and TurboTax said, "Oh, whoops, you over contributed." And so then I proceeded to read about it and thought, oh, okay, some people say that non-deductible IRA is not a good thing because you have to deal with the 8606 and all that stuff. And I'm what you would call small potatoes. I only have about $20,000 in an IRA to begin with, so I didn't really want to have to deal with that. So what I did was I messed around with TurboTax, and I finally got put $1,790, keep that as a contribution, and then the rest of it, about $2,700, I contacted Fidelity and had them return the excess contributions, had them place it into what they call a cash account, which is really a brokerage.
Yeah.
So I don't know if I did the right thing, and now TurboTax is saying I still have the $1,790 as an IRA deduction. I'm just completely confused.
Well, you did the right thing.
Yeah, I don't think there's any problem. I think everything you've done is correct.
Yeah, you
Sounds
did the
to
right
me.
thing. This happens when people, this is one of the problems with this whole system is that some people, you just don't know what your earnings are going to be. So
Right.
if you're actually in that bubble area and you don't want to deal with the hassle, if you're right in there where you're going to hit that limit and only have partial deductibility or partial contributions, it may pay to wait a little while until you have a better idea what your taxable situation is for the year, like toward the end of the year. But it's not a big deal to recharacterize to take that money back out.
No, it happens on a regular basis. I mean, we see it more in Roth IRAs, or obviously with the income limits there, which I think for two people is a $220,000.
The income limit for a Roth is higher than the income limit for a regular. A regular is like one.
Non-deductible, though, she could do anything.
Oh, a non-deductible.
Which I thought she mentioned at one point.
Well, she
So she's
mentioned
kind of
non-deductible.
throwing a lot of stuff around in there.
But
So
she was basically saying she didn't think non-deductible was any good because you can't get a deduction.
Yeah, but it's a savings.
The nice thing, and you can. Well, she has $20,000 in regular IRAs.
Yeah, right.
So if she did a backdoor Roth,
she could take the money
where
out.
she
of
took that money that's in that account now, that $3,000 or whatever it is, and backdoored that, she would have to pay transfer some of her regular IRA into a Roth and pay the taxes on it. But that wouldn't be a bad thing.
No.
In fact, it would be a great thing because now you're going to have, a $4,000 or so account that is tax-free for life.
And I think people often get hung up on the non-deductible IRA, regular traditional IRA, Roth IRA around taxes. I think saving is good, depending on your situation.
Yeah, I mean, is that profound?
It's really deep. I know.
Saving is good. Not
spending is bad.
Spending is
bad.
Yeah. Debt is bad unless it's a low interest rate mortgage. 855-935-TALK. Call now.
Tom and Don are talking real money. Reality radio for a really great future. future. We're talking real money.
We hope to talk about it with you. All you have to do is give us a call at 855-935-TALK, 855-935-8255. And people do that 24/7 because we have a fancy schmancy phone answering service that takes these calls and then...
I thought it was you. You're not sitting around in bed just answering the calls whenever they come in?
I tried to get you to do it, and you refused, so I hired a computer.
Okay.
This is what the computer...
Dude, I hate to tell you,
Yeah.
the computer's going to replace both of us.
Exactly.
Than you think anyway. So.
Yeah. Here's the call the computer came up with.
Okay.
You ready?
Yeah.
You sure?
Oh.
Hi, Bob and Ray. And I don't mean Brinker or Lucia either. I hold an inherited American tax-exempt bond fund, AFTEX, Alpha Foxtrot Tango Echo X-Ray. I want to exchange it for a Vanguard fund. Do you have any recommendations? I'm 76. This is the only bond fund I hold. I am still working. Thank you.
Wait, he's 76 and he's still working?
Still working. Yes.
I love that. That's
Yes.
Don's dream. Okay, so
yeah.
this is the American
Thank you for
Fund's
not
tax
retiring.
exempt.
Yeah, did you look at the
Municipal-
expense ratio?
I didn't get a chance to go to that. How much?
0.5.
Yeah, I mean, this is
50
outrageous.
basis points.
So do I have any
half a
idea?
percent.
Basically anything else.
Yeah, basically anything else.
But no, okay.
If
yeah.
you still need tax-free, then you probably should get into a comparable tax-exempt bond fund at Vanguard.
Has a good product, I believe.
They have all maturities, and I would go with an intermediate term.
Yeah.
Because we think that is going to, well, we know.
Give him the ticker, Donnie. Come on.
I'm looking for it. Hold
Vanguard
on.
intermediate term.
Intermediate term.
Municipal
That's long
bond
term.
fund.
I need to type in the word intermediate because
And do you want some spelling help on that? It's INTER.
I know how to spell intermediate. Smarty pants.
Yeah, well, we almost missed you for the full hour there. So
you missed me for the full hour last hour.
I was going to say I almost missed you. That didn't come out right. Sorry.
I don't even know what you meant by that.
I know. Well, it's only important that I know, not so important that you know.
Apparently, Vanguard. I don't know what the ticker is. Just ask Vanguard.
No, Vanguard.
I'm looking, but I'm not finding.
Yeah, we got people waiting to get on the radio.
I know. So I'm looking, but I'm not finding.
Right,
But again, and that is only the case if you're still in a very high tax bracket.
Really
Which, if
is.
you're still working at 76, maybe he's a doctor or something, and he makes a lot of money. So that's possible.
How about VB ILX? No, that's the intermediate. That's not tax exempt.
Yeah,
Sorry.
yeah.
Oh wait,
I was looking for the tax exempt one.
I couldn't find. I cannot find
Oh, I see. You have to type in term.
Yeah, it's kind of tricky. So anyway, we got people waiting. Can we go to them instead of your typing lessons?
No, not now.
Okay.
Enter tax exempt. Okay, you have to abbreviate everything. VWITX. Are you happy now?
Yeah. Much.
All right.
Much.
855-935-TALK is our phone number, 855-935-8255. Hi, Patty. Welcome to Talking Real Money.
Hi, thank you for having me. I appreciate it.
Oh, we're so glad you have a nice phone.
Question. It must be the AirPods because I got new AirPods, so that might
You
be
sound
it.
great.
But,
They sound
Clean.
amazing.
Very clean.
they're the ones with they got the little filter thing on it. So, yeah, it helps. So, anyway, FYI. But I have a question. My husband's retiring. He's going to make quite a bit because he's going to continue to work a little bit this year. But I have a truck loan, and it's $27,000. And I think I've got 5 more years, but the interest is only 3.2%. And so I was wondering, should I pay that off? I mean, the one thing I worry about is the monthly bill is $560. So, but I just didn't know, like, I'm trying to increase an emergency fund, if we need it. But I didn't know what you thought of that.
Wow, you have a nice phone and a nice truck, apparently.
Hey, $500 a month isn't that big anymore today.
No,
We've
it's
got
really
people
not.
that are $800 and $900. Crazy.
At that Well, it depends on what you do with the money. But even if you put the money,
I'd kill it. I'd blow it.
What,
I'd
you kill the loan?
I'd blow it up. Yeah, I mean, because
really?
3.2 is low. The fact is, you're losing an income. The fact is, if you have the cash from this money he's making this year, I just clean up my balance sheet in retirement.
Yeah, I guess all right. From a psychological standpoint, I go with that. But from a financial standpoint,
I think that's the thing I was thinking was it's just I don't want that worry. But otherwise, I would probably redo a couple of my bathrooms because I sell a house in a couple of years.
Truth
and
comes out. Yeah, okay.
Nice phone, nice truck, nice Johns. There we go. Thank you so much for calling. 855-935-TALK, 855-935-8255.
Tom and Don are talking real money.
Do you suffer from hodgepodgeitis? I'm Don McDonald, and hodgepodgeitis is a disease of your investment portfolio whose symptoms include lots of stocks, loads of random loaded mutual funds, and maybe an annuity or two. Most who suffer from hodgepodgeitis dread opening their quarterly portfolio statements. They feel lost and confused. Investing seems overwhelming and the financial future uncertain. If you believe you suffer from hodgepodgeitis, see a 100% fiduciary investment advisor immediately. A proper diagnosis is the first step to creating a portfolio with a purpose based on a personal plan. Start on the road to recovery now by scheduling a free meeting with an Appella advisor at TalkingRealMoney.com. There is no cost, obligation, or high-pressure sales pitch. Take the first step at TalkingRealMoney.com or call 800-386-3004. Hodgepodgeitis is not a real disease, but treating it has been shown to improve mood, reduce fear, and even lead to a brighter financial future. Results may vary.
Your guides to a really great financial future. Tom and Don are talking real money.
Hey, welcome back. I'm Don. Tom's over. Wait, where'd he go? He used to be there. Wow.
I'm
he
still
left the
here.
studio.
I was doing my jumping jacks. I'm back.
Really? Over in the corner?
Yeah, because that's where they make me go, in the corner.
I don't even know why you do them. You do know you're like 65 or something, right?
Don't tell anybody. Yeah.
All right. You're too old for that. You're going to hurt something. You're going to pull.
Sure.
You're going to pull something. You're going to poke your eye out. 855-935-TALK. Give us a call. We want to talk money with you. We do. We like doing that. We're gluttons for punishment. Money punishment. So call us like Janice did. Janice, welcome to the show. Oh.
Thank you. Just clarification for something that Tom had said earlier in an answer to a gentleman about
what did he do now?
I know. He indicated or stated, and maybe I just misunderstood some of what was said, that Schwab is not a 100% fiduciary.
Yes,
and
I know. I heard that too.
I got the impression that he also made a statement about putting his money with Schwab, and the other selection the gentleman asked about was Fidelity. Mm-hmm. So my question is, what do Appella clients do when their money is with Schwab when you're saying...
Okay.
Actually, Schwab does do some fiduciary advising.
Yeah, they do some. But
they do some.
In the case you're mentioning, though, Janice, and thank you for calling and thank you for asking, Schwab is just the custodian in your relationship. I was talking about somebody walking in the door working with an advisor at Schwab.
Right.
That's a different right. relationship. Yeah, I don't think it's 100%. I think
if you have an account, you can.
Maybe.
It depends. But the fact of the matter is, when you're investing with any registered investment advisor who does not act as a broker-dealer or a registered representative, which is all very confusing language, I know. But if you're, for example, Appella, our firm, or any other that's like ours, we have to have a custodian because we can't trade securities for you. We cannot do it.
Right.
Because they must be protected from... See, Bernie Madoff was a registered investment advisor. But he acted illegally. He put the money with Bernie Madoff. Whereas we must put it with somebody else, Schwab or Fidelity. And really these days, it's Schwab or Fidelity because Schwab bought TD Ameritrade. So Schwab is the custodian.
There's smaller players. I mean, they're the
small
biggest,
ones, but they're the big players.
So but my answer to the person who called last hour was, if you walk in the door to Schwab or Fidelity, I cannot guarantee that you will get 100% fiduciary advice.
Right.
Can't guarantee it. You may not. You may not. So nothing against Schwab, but some of the people that work there are not investment advisor representative. Right. They might be duly registered. So you're okay though. Yeah.
So an appellate client, in essence, has a different relationship.
Yep.
With
yeah,
Schwab
it is merely custodial. It just means they hold your securities for you, and the advisor and the client decide what is done with it. Schwab has no authority to do anything with the money. Where we run into potential problems is when you give Schwab the authority to do things, then they may or may not be in your best interest. But this way you have an advisor protecting you. So I think you're in great shape. And Janice, thanks so much for the call. Stephanie, it's your turn. Welcome to Talking Real Money.
Yeah, I just had a question, and I've listened to you guys on and off, so this is my first time talking to you guys. I'm 43, and I have a 401k just sitting there. Like, it's from an old employer. And I'm not sure what I should do or what the best thing is to do with that.
How much is there?
There's about $18,000 in it.
And have you moved on to a new employer that has a retirement plan?
Yeah, my new employer has a pension, so I have pension.
So she's got defined benefit at the new employer where she had a defined contribution. So it's IRA now, right?
Yeah, I think so. I think I would open an individual retirement account either at the aforementioned Charles Schwab or could be
Fidelity
Vanguard.
Or Vanguard.
And then I would roll that money over to the individual retirement account and buy a couple of index funds. We mentioned a few at our website, talkingrealmoney.com. Then there are others, but that's what I would do. I'd clean it up. I wouldn't leave it behind. This is what we see oftentimes. People wake up at 50 and you're young at 43 and say, oh, my God, I forgot I had this other thing here and I haven't been paying attention to it. That I don't want to see you do because people have a tendency to forget.
And at 43, because this is long-term money still, you're looking at 2 decades plus before you're going to touch this money. Because of that, you should be moderately aggressive, at least, in your approach. And you could do something as simple as, and literally as simple as VT, the Vanguard Total World Stock ETF. Just put it all in there. You're going to have massive diversification. You don't have to sweat the details. You don't have to deal with anything. And let it ride for a decade or two.
Yeah, it's going to grow.
It
should grow a lot. I mean, because you're all in stocks. So I think that's great.
Yeah.
I'm happy that you're getting a pension because not very many people get pensions anymore. So good for you.
Yeah.
Yeah. You were saying Schwab. I should contact Schwab to do this?
Schwab is great. Vanguard is great. Fidelity is great.
Honestly, you could go online in about 10 minutes and set up an individual retirement account, IRA, at Schwab.
Yeah. Do you have your statement from your account?
Not with me right now. But
No, not right now, but you can get your hands on one, right?
Yeah.
Yeah, if you go online to Schwab, set up the IRA, and tell them you want to transfer assets in from a 401k, and they'll ask you that right there in the process, and then you'll put in your account number and the information on your account. They will go get those assets and bring them over for you.
Okay, cool. Thank you so much. It's been sitting there for a while because I wasn't sure what to do.
Yeah, it's it's hard, but once you do it, it's easy. Once you get it done, you'll go, oh, that felt good.
And this is one of those things. Thank you very much for the call, Stephanie. This is one of the things that I think you coined this phrase. I hate to give you the credit. It pains me a great deal to give you credit like this. But
did I coined another phrase?
Yours. Yeah, I think the hodgepodge thing is
hodgepodgery, hodgepodgeitis.
And this is what happens with people like Stephanie. If you leave things behind, and then
it's
again,
a debilitating financial disease.
It's just awful. And
it is just awful.
What do we recommend? Is it 2 pills in the morning or at night? I always forget.
No, it's a 100% fiduciary advisor.
That's it. Call me twice. But clean these things up. Do not leave them behind because, and by the way, if anything were to happen to you, it's even worse. Because for the people you leave behind, it's even harder for them to get the money, even if they're the beneficiary. So that's another reason to sort of make it easier.
She's 43. We're more likely to go than she is.
That goes without saying. Maybe by the end of the hour. I don't know. As the tough as this show's been, it wouldn't surprise me.
Hey, hey, wait, you know, if you hadn't mentioned I wasn't there, no one would have noticed.
Oh, come on. Sure, they wouldn't have. Yeah, right.
Yeah,
anyway.
Well, anyway. A couple of things. Remember the phone number, because, you know, you may wake up in the middle of the night and go, oh, I have a question. 855-935-TALK, 855-935-8255. Not only can you call that during the show, but you can call it any time with your questions.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
And if you need help when we're not around, just make sure you go to talkingrealmoney.com, because not only can you listen to, like over 1,100 podcasts there, glutton for punishment, aren't you? You can also read all kinds of great, timeless investing articles. There's just tons of them there. I mean, I don't even know how many. It's a lot. And all kinds of other great information, including like talking to somebody, getting some help. So all you need to do is go to talkingrealmoney.com. That's talkingrealmoney.com and explore it, because oh my gosh, like the information on how to find a 100% fiduciary, great information. You got to read it. Go to talkingrealmoney.com.
We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future, so past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial product or securities. Instead, the program is provided as a public service by Appella Capital, a fee-only registered investment advisor. Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures. Are we done now?